afternoon, traders. This is your free video update from Seasonal Swing Trader. Today is Thursday, March 22nd, 2018. Today we're taking a look at the Canadian dollar futures symbol 6CM8. That's the June contract. ETF and equity traders can look at FXC. FXC, that's the currency shares ETF. And we're looking at a potential long trade to the upside here on the Canadian dollar. Notice that we've been working down lower here, putting in consecutive lower highs. We didn't quite take out this high back here. We came up here. We've made a couple of attempts higher. We failed. And now we're starting to pick up a little bit of steam here. We've got a pretty clean trend line here going up from this 81.50 level down to this 77.55 level. And notice that today we broke above it. So yesterday during FOMC day, we had some pretty good strength off of these profile levels down here at 76.50. We bounced off, bumped our head into the trend line here, and have now cracked that line. And today we've had a range of from high of 78.06, a low of 77.42, and we're currently trading at 77.75. So if we can maintain a close above this trend line and trade and close into positive territory, we like going ahead and taking a nibble to the long side via call options in the Canadian dollar. Notice that our momentum is also pointing higher. If we look at a weekly chart, we've got some past, we always like to go back and look to see if we have some past support here to reference, and we certainly do. So all the way back here in 2016, and then again all the way here in August and September of 2015, you can see that that was a turning point for the market. So this past resistance now becomes support. We have some sticky action right here. Those that are trading that like to use Fibonacci, we are trading right into the 618 level on the weekly time frame perspective. So if we pull up FXC, which again should mirror the futures contract pretty closely, may not be as liquid as the futures contract, but we can trade FXC. So again, you can see we have the same pattern here. We are breaking this trend line here, trading at 76.60, up about 15 cents or so. So we like going out into the June contract. Gives us about 85 days or so to play this trade. We like these in the monies here, these 76 calls at $1.50 by 165. So trying to work around $1.50 to $1.60 or better for this trade. From a seasonal perspective, we have some really strong seasonality on the 5, 15, and 30 years, going all the way into late April, early May. So buying these Junes should give us enough time for this trade to play out. And we'll be looking for first targets up here around the 78 level, and then ultimately up here at the $80 level. So we like taking a low risk trade to the upside via call options and FXC or the Canadian dollar. Again, those are the trading futures or futures options. Can also consider the Canadian dollar futures options. I've got the June contract pulled up here. You can see they expire June 8th, and we like these in the monies here, these 77 halves going for 118 by 120. So you take this and multiply it times 10, and you can see the value there is 1,240. So if you bought it here at 120, that would cost you $1,200 in premium. That is the max you would lose. Of course, we would not risk that entire amount, but that is the cost of that option. And then FXC, the 76, if you're paying $1.60, that'd be $160 per contract. So if you've got any questions, let us know. Follow us on Twitter, Facebook, Instagram, and YouTube, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.